In this video, why U.S. pass-through LLCs are a powerful business structure for entrepreneurs, freelancers, and investors in 2025 and beyond. With over 95% of U.S. businesses using pass-through taxation, LLCs are much more common, pass-through LLCs are much more common than you think they are, and they're really the go-to choice for their tax advantages, liability protection, and flexibility. Whether you're running a small business, freelancing, e-commerce, or managing investments, we'll explore the benefits, drawbacks, and key considerations, all grounded in the latest data. So first, let's unpack the core benefit here, which is pass-through taxation. A pass-through LLC does not pay federal income taxes at the entity level. Instead, profits and losses, quote unquote, pass through to the owners, known as members, who report them on their personal tax returns. This avoids the double taxation that C corporations face, where profits are taxed at the corporate level at typically a 21% flat rate, and again as dividends on personal returns. So, for example, if your LLC earns $100,000 in profit, that income flows to you and is taxed at your individual rate. So, if you're in the US, it ranges from 10 to 37% based on your total income. If you're outside the US, you get taxed wherever you're a tax resident. Single member LLCs file using Schedule C with Form 1040, while multi-member LLCs file Form 1065, issuing each member a Schedule K1 to report their shares of profit or losses. If you don't know what those numbers and forms are, don't worry about it. The idea here is that this structure simplifies tax filing and saves money by taxing income only once. Another perk is the Qualified Business Income Deduction, the QBI, under Section 199A of the Tax Cuts and Jobs Act, which is extended through 2025. Eligible LLC members can deduct up to 20% of their business income, reducing taxable income. For instance, if your LLC nets $80,000 and you qualify, you could deduct $16,000, lowering your tax bill. However, QBI phases out for incomes above $191,000 for singles or $383,000 for joint filers. And it's unavailable for certain service-based businesses like law or consulting unless income is below these thresholds. It gets a little bit complicated. QBI, they're trying to make it more accessible, but with careful planning, a tax professional can help you maximize. And by the way, if you're looking for a tax professional who can do your U.S. tax return, if you're American, MyLatinLife, we can help with that. If you're a tax resident somewhere in Latin America or Canada, we can also help with that as well. If you need a U.S. LLC, you want this pass-through LLC, we can help with that as well. There's a link in the description where you can book a call with us. We can answer all your burning questions and get your LLC set up for you, including the EIN number, the bank accounts, everything that you need to do business through your LLC. So link in the description. Book a call with us to get started. Moving on with the video, LLCs also offer tax flexibility beyond the pass-through taxation. So by default, single-member LLCs are taxed as sole proprietorships, and multi-member LLCs are taxed as partnerships. However, you can also elect to be taxed as a S corporation by filing Form 2553 or a C corporation via Form 8832. You're probably not going to want this stuff if you're living outside the US, but it's important to be aware that these things exist. S corp status can reduce self-employment taxes, which are 15.3% of Social Security and Medicare, pretty significant. You can do that on all pass-through income for sole proprietors or partners. With an S corp election, you pay yourself a reasonable salary, say $50K, $100K, whatever, subject to FICA taxes, while remaining profits are distributed as dividends, free from self-employment tax. For example, if your LLC earns 100K and you take a 50K salary, you save around $7,000 in self-employment tax on the remaining 50,000. However, S corp compliance like payroll and annual meetings adds complexity, and net income below 70K per member may not justify the switch. But just something to keep in mind there, as a U.S. citizen with an LLC, you have some options. If you're a non-U.S. non-U.S. citizen, the LLC probably makes sense to just keep it as a pass-through. Liability protection is another major benefit. The LLC shields your personal assets, like your home or savings, from business debts and lawsuits, unlike sole proprietorships or partnerships. If your LLC faces a lawsuit, creditors can only pursue the LLC's assets, not your personal bank account. This protection is why LLCs are the most common U.S. business structure, with over 2.8 million registered in 2024 alone. Members are liable only up to their investment, so a 10% stake limits your loss to that amount. This makes LLCs ideal for high-risk ventures like real estate or startups. Another benefit is flexibility in management and ownership, and this really sets LLCs apart. There's no limit on members. Individuals, corporations, or foreign entities can join, except for banks and insurance companies, per the IRS. You can run the LLC yourself or appoint managers, and there's no need for formalities like board meetings or bylaws, unlike C Corps. Operating agreements let you customize profit distribution, voting rights, and exit strategies, ensuring smooth transitions if a member leaves. For example, a business continuation agreement can prevent dissolution if a partner dies, avoiding the need to restart the LLC. This flexibility suits small businesses and joint ventures like real estate syndication. Tax deductions further enhance LLC's appeal. Members can deduct business expenses like office supplies, travel, or marketing, reducing taxable income. If you work from home, the home office deduction applies, potentially saving $1,000 or $2,000 annually, depending on square footage. Healthcare premiums are deductible if the LLC is profitable and you're not covered by a spouse's employment plan. I'd be curious how that works for Americans abroad. We'll have to look into that. Retirement accounts like solo 401ks or SEP IRAs allow contributions up to $69K annually. That's the 2025 limit, deferring taxes and cutting taxable income. For instance, contributing $20K to a SEP IRA could save $7,400 in taxes at a 37% rate. These deductions are especially valuable in high-income years. For global entrepreneurs, pass-through LLCs offer unique advantages. Non-residents can form U.S. LLCs, and listen up here, guys, and if they lack a U.S. office or employees, they typically pay taxes only in their home country, though they must file Form 5472 and Form 1120 for reporting. And by the way, we can help with that as well. This makes U.S. LLCs attractive for foreigners leveraging America's stable legal system without U.S. tax liability. The territorial tax systems of countries like Honduras or Panama or Paraguay pair very well with LLCs, as foreign LLC income is often untaxed locally, ideal for digital nomads. However, non-residents need an EIN number, an employee identification number, and may face state-specific taxes like California's $800 franchise fee. That's why we don't incorporate in California, among other reasons. LLCs also support asset protection strategies. By setting up multiple LLCs for different assets, like one for real estate, another for a business, you can isolate liabilities. If one LLC faces a lawsuit, the others remain untouched. Now let's address some of the drawbacks, because we want to be a little bit balanced. Pass-through taxation means members pay taxes on all profits, even if retained in the LLC for reinvestment. If your LLC earns $100K but you keep $50K in the business, you still pay taxes on the full $100K, which can strain cash flow. Self-employment taxes hit hard. You're paying 15.3% on all pass-through income unless you elect S Corp status. Quarterly estimated tax payments are required, adding administrative hassle. Some states impose extra taxes as well. By the way, changing your tax status, like from partnership to C Corp, locks you in for 60 months, aka 5 years, limiting flexibility. LLCs may also struggle to attract formal investors, who often prefer C Corps for the structure. Other challenges include state specific regulations. Formation requires filing articles of incorporation and paying fees. So, who are pass through LLCs best for? They're ideal for small business owners, freelancers, or real estate investors needing liability protection without corporate complexity. They're also great for digital nomads in low tax countries where they pair the LLC with a tax residency in Paraguay, Honduras, or Panama, minimizing global tax burdens while giving you access to US markets and Stripe and PayPal and US bank accounts and all the things that you need to make money and spend pesos. To set up an LLC, there's a link in the description to book a call with us, and we'll give you a custom quote based on exactly what you need to get started. We have a whole team that spins up LLCs. We have a team that files tax returns and does reporting. We have US residential addresses if you need an address service to solidify that KYC for banking and everything. So we really have everything that you need to make this reality. In summary, US pass-through entities offer significant benefits, especially to the digital nomads and expats that we typically work with, but really for Americans as well that want to be able to have business expenses and therefore lower their taxable income so that you can write off your computer, you can write off your phone plan, you can write off some of that travel and get those deductions on business expenses, on healthcare, on retirement contributions, all these different things so that you can ultimately pay less tax and invest more into your business. Plan carefully, consult experts, and stay subscribed to MyLatinLife for updates on building a tax efficient business. And by the way, if this video was helpful, give it a like, subscribe to the channel, hit the bell for more business and tax tips, especially for international entrepreneurs. If you have any comments, share your thoughts in the comments below. We'd love to hear from you. Remember, again, book a call as well if you want to speak to us directly, and we'll see you in the next video.